what is classified as a finance cost under Section 24. I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. I've recently been asked what is and what isn't a finance cost. So I wanted to just clarify today what is covered in the finance cost and what isn't under Section 24. Now, before I dive into those specific costs and a few bits to give you the legislation so that you know exactly where things are coming from, I wanted to just first start with what is the impact, because you might think, who cares, what does it matter? Well, obviously from a tax point of view, it's significantly changed with Section 24, which hopefully you've watched the videos on how Section 24 works and had a look at the numbers to see how it fits together. And based on that, hopefully you will know that where those finance costs has gone from the top line, in essence, your rent take off your expenses, down to below the tax line, which in effect means that because we can no longer take off our finance costs off our rental income when we're calculating our rental profits, it means that our total income for tax purposes, for higher taxpayer child benefit, for any other benefits you may be getting, will be showing as a higher amount now, which means you may lose things at an earlier point than you used to. So for those who've got rental property and are maybe 45,000, it may be that your rental income is now taking you over the 50,000 mark and you're losing your child benefit. So this sort of question of whether or not it's a finance cost could be quite a crucial one for you, because it may have an impact on what your rental profits are and what your total taxable income is. So this kind of means it's quite a crucial question to make sure if there is something that's not a finance cost, we can take it off our rental profits, and if it is, we can get tax relief on it on the interest rate relief restriction and this special tax credit that was created, which is at 20%, so we can still get tax relief on it. But it's in a slightly different place, which, as we can see, may have other implications. So let's jump into what is and what isn't going to be a finance cost. Now, the relevant legislation we're talking about was introduced back in 2020. And the reason it was introduced is because we moved things. They brought in this interest rate relief restriction when they basically said you can no longer claim your interest and finance costs as allowable expenses against your rental income. So what they brought in, which was brought into the Income Tax Act at Section 272A and 272B, was restrictions on what we could claim for our finance costs. It was also then added in Section 274 in several different paragraphs, ways that we were restricting the calculation of what we were allowable to claim. And then Section 399 made sure it was only restricted to individuals who were doing things. So with this legislation, it basically said you cannot claim these types of expenses as allowable rental expenses. However, we're going to introduce this tax rate relief restriction at the 20% basic rate band. So you still get tax relief, but it's restricted to just the 20%. You can't get it if you're higher rate or additional rate taxpayers. Now, the key things that it specifically said was that this applied to interest and relevant finance costs. And it was specifically the finance costs on loans taken out for a property business which involves the letting out of residential property. This does mean that there were certain exclusions which we'll cover in a moment at the end when we've sorted out what we can and what we cannot be claiming. Some key points we should note are that any payments that are interest or may not be described as interest but are in effect taking the same treatment as interest would, and in essence are economically equivalent to interest. So think investor payments and things like that when it's talking here, and any incidental costs in obtaining that loan. which is including things like fees and commissions. So that gives you an idea of the legislation, but what does that really mean? That's what we're here today to talk about. What does that really mean? Well, that really means that obviously there is the interest on any of your loans, mortgages, investor finance, and all those different people that we're getting money from and paying them some sort of fees or interest to them. All of that expense will fall within the finance costs regime. So when you're doing your personal tax return, that will be going into the box which is the interest rate relief box 44, I believe it is, on your tax return, and you'll be getting the 20% interest rate relief restriction. So you'll get tax relief, but it will be restricted to a maximum of the 20%. But what other costs will fit into the finance cost? Because let's be honest, that one is relatively obvious. I think we can all definitely say that that is going to fit into that box. But what else is covered? The things we need to remember that would be covered is if you're running an overdraft on your bank account, any overdraft costs would fall into this category because, again, it's a finance cost. If you've got any leasing of any furniture, the furniture leasing will fall within this because it is a type of financing, and those financing costs as an individual fall within the finance cost element of the tax return. We now also need to remember the other sorts of costs. So let's have a think about what have we got. Well, when we get a loan, we normally have some sort of product fees or some sort of charges, and all of these are in the obtaining of that finance. So that would all fall within the finance cost element. Now, I tend to use, I don't know about you, I tend to use a broker. So again, this would fall within the finance cost because this is all in the obtaining of that loan and is an incidental cost that would fall within the finance cost element for an individual. The other side of things may be things like legal fees, because legal fees again are as part of obtaining the finance. So again, any of these associated costs would all fall within the finance cost element. As we have said, you can claim them, they're just restricted to the 20% cost of them. So please make sure you do pull those out, because I do think that certain product fees, if you put them onto the mortgage, are slightly hidden. You don't actually physically pay them, which means you don't remember that you've got them. But those can be put on your tax return, and if you can't fully utilise them, then those losses or those costs will get carried forward as part of the interest rate relief, the finance cost element, that are unused for future periods. So they don't get lost, they can be used at a later stage. Now it should be noted the oddities, because we've talked about what will be included, but let's just make sure we cover today what will not be included. So this is only for individuals. So for company ownership, this does not make any difference. They are all fully allowable and they will go in your profit and loss account. So all of those different expenses that we've mentioned to do with interest. It should also be noted that this is for residential property as well. So if you've got furnished holiday letting, then the interest is fully allowable on those properties. Now, if you have a mortgage which covers several properties, some of which are furnished holiday lets and some of which are residential, then you'll need to just make sure an appropriate apportionment is made of that interest, if it's a loan on the whole kind of portfolio, to cover the different elements. And the furnished holiday lets, they would be allowable as against the profits on the property. For anything on the residential side of things, they will go through the finance cost element calculation. A further one that's unchanged is our commercial property, which our commercial property, again, not changed, that will come off the rental profits and reduce your rental profits in the calculation. So again, another area which is unaffected by the change with section 24 and the finance costs element. That hopefully covers just those few oddities. So if you have a range of different property type, you may just need to make sure you are au fait with which ones you can be claiming, which ones you can't be claiming, and where things end up on your tax return, whether it is as a expense against your rental property, which is commercial or furnished holiday lets, or whether it's a residential element and it falls within the finance cost section 24 element. As I've said, please check out the Section 24 video to find out more about how Section 24 works, but hopefully today you've got a taster of exactly what will fall under Section 24 and what is a finance cost. Hopefully today you've discovered what will fall within the finance cost section of your tax return. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. Let's make tax less taxing.